Can I cut that into the intro?
No.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tungseth. He's Jon Prischmann. Well, John, there's movement on our street outside. They are actually finally paving the street to our south. We are going to have, as you described a few episodes back, a bougie area of town to work in.
Yep, it's up and coming here. I'm hoping that it'll be profitable in the building. I just put AC and heating in here because AC went out last August, if you remember, right at the end, and I thought it would be nice and easy glide into fall without air conditioning, and it was super hot.
I had 4 fans in my office, and I was still sweating. I remember well.
September was really hot last year, and that's you know what, the crops are going to need that this year. I hope it doesn't happen. I hope it's just average, but they're going to need it here.
Yeah, well, the crops need a lot of stuff right now, don't they? I mean, they must be falling apart. I saw a 2-cent gain on soybeans or something like that.
Yeah, it's, now we've settled in. The easy money on the downside's gone in. Now we've settled into what you would consider a bear market in grains. And they're not usually really exciting. Today would be a perfect example of what you can expect a lot more of. I think, what was it, down 3 in soybeans? Next thing you know, we're up 6. And then, then all of a sudden we're unchanged, up a half for like the rest of the day. And corn down 3 in September, December not being down as much, and that's been a pattern we've seen. And then corn just kind of sat down. It went down like 1.5, 2, stayed down there the entire day. I don't think it moved much at all. And that's where we're at. We're well into the bear markets and the new way to trade.
I've been keeping an eye on soybeans. We talked a little bit last week about maybe some signs to start looking for if there was a bottom or maybe some movement off. And one of the things I've been tracking a little bit is the November 24, November 25 spread on beans. And yikes is all I can say when I look at that. I think, 56 cents under?
Yeah,
today.
That's not a good sign. That, especially for beans in a market that can take that carry out so fast to see max carry. It really started in May, July. And I talk about the spread often because I was on the wrong side of it for months. It ruined my Vegas vacation, but that's a whole nother story. Although I did end up winning money there, it still was a stressful thing, and it wasn't moving around that much. It was just doing something you didn't think it could possibly do. They widened the carry out nearly every day, a half, a quarter, and it ended at a record carry in May and July. And that's really when I started turning bearish on soybeans, because that is not a common thing to see. Soybeans don't like a lot of carry if the market's healthy at all. When you see a lot of carry in the market, that's really a bad sign for soybeans. And then May, July being one of the worst signs. That's a very normally a very harmless spread. I think it was, negative 16 at one point. That's normally inverted 20, 30 cents the last few years. It has been. But it naturally tightens up. To see that was really alarming, to have too many beans around in springtime in the commercial channels, and that hasn't let up. It's only gotten worse. I think ultimately August collapsed versus November as well. That's normally a spread that can be anywhere from $1.50, $2 as the last of the old crop beans tighten up. But it's just been one collapse after another in soybeans, and that spread November. Negative 45 is where it likes to settle in when it gets really bearish. When it gets extra special bearish, like this year, you get another 10 cents. And it's not a record, but it's just a couple cents away from a record, I think, 2 or 3 cents. Why am I talking about this? All very bearish signs. These are not what you want to see when you're looking for the USDA's wrong, there was nothing left over, and that kind of talk. You're not going to see carries maxed out like that you're seeing right now. Even on a pretty quiet day today, they added more carry in the corn. Terrible sign. We haven't even got to the harvest and the actual pressure that we're going to see. A lot of times the markets, it is futures. It does anticipate the pressure, but we really haven't seen what's going to happen? If the commercial channels look very full now, according to the spreads, and I do trust the spreads, that what is it going to look like when we start hauling this thing in, unless demand's starting to really clean out those channels? Are they overdoing it and saying it's just this mega crop and they're putting extra carry in just because of that? Or is it really that much stuff left over from last year still in the commercial channels? I think there's still left over from judging by what I hear on the phones. And everybody dumped what they had to dump going into what they want to store. So ugly in the bean spreads, the corn spreads, breaking records in the corn spreads. I mean, what is it, September, November, or September, December, negative 22, 23 record. I mean, these are uncharted territory. So it's gonna get tricky in here. I mean, seasonally we do usually see a bounce this time of year of some sort. Especially corn, the last 5 years has been really good in this time window. Whether that's the Pro Farmer Tour putting the numbers out and then it goes down on that and then it bounces the next week, I think that's mostly what that is. But it's ugly when you look at the spreads. Which, you know what, in my opinion on that, I think that tells you everything you need to know in the short term at least. The board doesn't look much worse than this ever.
Well, I think we've talked about that more, and I think it bears repeating, and we should dive in even a little more if you have more on this. But I don't know how people trade without looking at the spreads. The spreads are the first spot that I want to look, and so maybe you can give a little bit deeper dive of maybe there's specific spreads you're looking at, and if you want to do it by market, I think it makes sense to look, at least talk beans and corn on some of those spreads. Like, what are some of those seasonal spreads, or it's crop year spreads, or what are maybe a couple of the major spreads that you do kind of keep an eye at to at least see what the market's telling you?
Yeah, normally for the grains going into the growing season, they'll be bull spreading. We'll have inversions. We've had December 25 was inverted over 26 corn. Some of the stuff in back was still inverted. July 25, which is this year's crop, was inverted over December 25. I think it was plus 14 in May. And now that's, negative 6, maybe 7.
You're talking corn.
Yes, corn. Right? And everything's falling. So what you normally see is the spreads invert. If it's really bearish, they might not, but invert with the idea we have no idea what this crop is going to be like going into the middle of summer. And then once more gets known about the crop, which is almost always mid-June, you'll see the spreads start to widen out again. So that's something I participate in every year personally, or at least attempt to. It can be a very tricky situation because they're very dangerous if you're early. But what does it tell a producer? I get a lot of calls like, hey, I got these contracts. I want to roll them out to July. You're looking for the optimal roll windows where you can pick up as much carry as possible. So you're going to want to know the history just on that alone. And if you're looking at hedge to arrives, you're going to want to know what contract belongs, where, at what time of year to make the best hedge to arrive just at the elevator. So even if you're doing nothing here, it's still vitally important to picking up that 5 extra cents, that 10 extra cents on your bushels, 15, 20. Sometimes it can be upwards of 40 cents if you pick the right contracts. And that's something guys know that they should know that don't seem to know very much about. They kind of recognize like this time of year, December gets about 25 cents under July normally, and then it'll get called, should I roll it? Or you'll see guys rolling it at this time of year. But really, it's just from memory. They just kind of remember December's cheaper and July is more expensive. They should know a lot more because you can add a lot to the bottom line if you know your optimal roll windows, know what contracts to pick for your optimal hedges, especially for corn and beans, both important in that May and July time period. Even going into August can be very, very important, the decisions you make even this time of year. Again, I have no idea how people market very effectively when you don't have even the basics down. It's something that changes all the time and you're going to have to keep track of to some degree. But it's something that a lot of people don't watch, and it's very important. The commercials watch it. The guys that buy your grains watch it. Everybody that's trying to profit with your grains watch it very carefully, and they sure know where the stuff belongs. It's the producers that that they just seem to get confused on a little bit, and it's just one more thing in the pile that you need to learn when you're all busy farming, and it seems to be hard. And again, that's why Ryan and I are here. We're the guys that tell you, hey, this is historically where we are. Maybe we can expect this year, and this is the optimal window. You need to get guys on your side that are telling you how to look for this stuff, or just flat out telling you, hey, this is when I think you should be looking at your role. It's just something that's really not talked about a lot. You'll see it in a lot of analyst stuff, and you'll see this means that, and you'll see guys spin it certain ways. It's inverted. It's bullish. Like in beans this year, there's some guy saying that on Twitter when it was on its way down, falling like a meteor. That isn't bullish when they're putting carry in the market. So now we're at what I would think max carry. Is there opportunity in that? Well, and that's where it gets tricky, the bear markets,
Before you jump into that, though, I think it's important to know, especially on a producer, like John's saying, you should know those spreads if you're doing your own marketing. But if you're busy as a producer, if your job's the producing, and then have a guy. Yeah, have a guy who's good, and that's what we know, and that's why we're here, right? Or that's why your guy is there. He should know that stuff because there's money to be made there. And I guarantee you, those elevators, whoever, they want to make the 5-10 cents you don't know about. Yeah. So you have a guy to make you that 5 cents.
Yeah, they're counting on you not looking into it, not having a guy, trying to figure it out yourself, and not really having a lot of information to go on. If you look online, you're going to find very little to no information on that. And it's not exactly by design. It's just something that people don't talk about. Again, to what you were saying, it's to the other side's advantage. The people that are buying it, booking delivery at other dates. When they can store it for less than let's say they can buy it off you and store it for less, they're going to net out and just arb that off you every time. So you're going to want to try to use that to your advantage, not theirs. And kind of reverse the role if you can. And of course, every farm is going to be different depending on storage, depending on a lot of different things. But we could talk about this quite a bit. There's a lot of things that you could do, like just simply storing your grains. Maybe you want to look at calls. If calls are way cheaper than storing your grain, it's a lot smarter idea. But you want to not tackle it all at once. Just try to figure out a little bit at a time and keep improving. But these are the things that, like I say, as a marketer, you can fight back with a little bit, or at least be more knowledgeable and make better decisions.
Absolutely. Now let's get into the excitement of bear markets, because everyone likes to trade a bear market. So
yeah, you get these calls. You see, like I think I was talking to you today. Natural gas. Oh, it's a steal down here at 190. Yeah, because it's the summer, number one, and it's like, well, what does the winter cost? Well, 260, 270. And then all of a sudden it doesn't look like that great a deal. So that's the carry in the market, and that kind of that like I had one guy that was looking at buying September corn today. And then it's really cheap in front, 370 something, 375, somewhere in there. But then you jump up to that record carry you were talking about, and you're at $4 for December. So all of a sudden, it's you're buying the rally. The rally's already built into the market, and it's not as good a deal as it. Like, that's a bear market, and that's why they're really hard to buy. Because to get the best deal, you're going to have to buy the front at the actual bottom, and that's very hard to do. So you can't go deferred. When it's flat, you can say, I think by July we're going to be above $4, and just buy July for $4. Because if you look, there's more carry in there, and July is $4.20 something. So it gets to be a tough market to actually bottom pick on. And then not only is it tough, it doesn't usually V bottom out of there. So you get this real meat grinder back and forth. Is it the bottom? A lot of head fakes before it is the bottom. Is this the real one? It tends to be not a great money-making opportunity for the bulls. 2020 being the exception to the rule. It's supposed to be the most bearish market ever. And then 2020 V bottomed out of there and went way higher. Again, people fall back onto that market and hope or assume that something like that's going to happen again, because it happened in the past. But generally, bear markets aren't like that at all. They're long, grinding, wear you out. I was watching YouTube videos at one point today because the grains were so boring. Although cattle Cattle made it a little more interesting, and that's the nice thing about doing what we do. When one area gets boring, there's lots of other stuff to look at. And it was in commodities, it was kind of a boring day, except for cattle. Yeah. Cattle, it was, well, I mean, if you're short, I mean, you're a happy guy. But other than that, nobody's happy about the cattle market.
I was going to say, you want to dive into cattle now, or do you want to finish the thought you were on? Because I do think from a bear market perspective, and when we talk about those trades, it could be vice versa, right? So if you're hedging, if you're looking out at those time frames, like you mentioned, September. No, yes, if you want to try and buy September, you got like 8 days or something
you don't have
to buy
very much
it.
Time.
But if you're looking to hedge, if you're looking out at 25 or you're looking at 26 or you're looking at the spreads there, maybe there's not something today. There's still opportunities out there because of that market too,
yes,
right?
It actually the carry does create opportunities, and that's a whole nother facet of it. Bearish in front, but it's actually maybe a little too bullish in the back end, and can you take advantage of it? To me, I'm in some of these spreads with like July and December and some various combinations of that stuff. It looks like they've been beating up on December 25 quite a bit, and I would guess that's a lot of big-time hedging, and it's been happening since about 450, and I think it's 435 or somewhere there. It doesn't seem to have lightened up much. Again, I can't prove that. It's just a hunch. It sure looks like they're getting after December 25. And again, they're using the carry to their advantage and saying, hey, I can see the future. It's 377 in front. I think it's going to be just as bearish coming into next year. Why not grab that 450? And then there's things like using that price and then using options and using different strategies to try to build a better price for next year. That carry helps with that. Again, back to what we were first talking about, how recognize what to do when. That's what we do. Like I know where 25 belongs versus 26, and what's a better hedge right now, or should we worry about 26? These are all things that you learn by watching these spreads all the time. Of course, you're not necessarily going to be 100% right all the time, but you'll at least know whether a 25 is a better hedge than a 26 right now, or do I need to worry about 26 at all? What's history show? That's the kind of stuff those are the questions you should be asking. And again, your guy should know. And if he says something like, hey, I don't follow spreads, it's hard enough keeping track of where one contract belongs, much less two contracts. If he says stuff like that, that's pretty bad. That doesn't have anything to do with anything. You don't need to know the price direction of two contracts, just the relationship between those two contracts.
I mean, if you know that the price is in front and it's going higher, the price in front is higher and it's going higher.
Yeah.
The price in front is higher and it's going lower. The price in front is lower and it's going higher. But so that's the relationship you need to know, right? I mean, in that number, and it doesn't take.
Yeah. Where's open interest? How's that been looking? Where's a fun position, and what the seasonals, and then factor in the USDA's numbers. And then that's all you can do. You just read the tea leaves from a fundamental side. You're going to have your guys with are reading charts and all that. But that's what you can do from a fundamental side. And I would say the grains trade fundamentals more often than not. And a lot of guys will debate that, especially in a macro view. There's very, very few times where we're way higher than we should be in grains or way lower than we should be. I know that's not what guys want to hear, but the market is a good way of fixing an oversupply and an undersupply. And it will overshoot on both sides without a doubt. But you won't find it settling in and just trading way, way below where it should be, for extended periods of time. It definitely happens in shorter periods, no doubt about that. But on to cattle, that's a market that's...
I was just going to say, speaking of overshooting or undershooting, let's talk cattle today.
Yeah, and you can see in the spreads, you look at October cattle versus the August is the front contract. August is a full $5 ahead of October. Exceedingly rare that happens. Normally, October would be a higher price contract than August. Doesn't always happen that way, but this, if it isn't record, it's got to be very close to a record. And the only other year that it would have been comparable to is probably 2008, when they sold everything off, no matter what this time of year. It was on the way down and created a lot of spread opportunities. But, the ones that were closer to reality we're closer to the cash price where everything deferred fell. That's what cattle feels like right now. You have just these weird structure to the market where August is the leader. October was the second highest price contract. December was the third highest price contract. I don't remember a time I've ever seen that. It shows a market that's being pressed down. They're in where the speculators can be, and that's October, December, February on back. So those are going to be your weakest contracts, which is not normally seasonally how cattle goes.
Well, seasonally, what are your strong contracts?
December is stronger than October. Oftentimes, you'll find October 550 under the price of December. Very rarely will you find October over, but it does happen. August generally is the weakest contract on the board. It depends on the summer. In the 2014 bull market, it was among the strongest. But it's uncommon. And then February, April are the two generally strongest contracts on the board, April being the strongest. And then April normally is $5-6 over June, so it kind of goes into this pyramid, and April being the highest price contract. It is actually the highest price contract now, but not by much. Very unusual structure. It shows that they're pressing the short side well before the actual fundamentals in cash market are there. Cattle guys, unfortunately, live through this more than once. It's uncommon for it to be this aggressive. Well, we're down 350 today.
At one point, 350. At one point, it was down over 4, I think.
Yeah, I was sniffing around the long side today. It had my attention. And that's where spreads helped me today. I recognize where the spreads are, what the spreads are telling us. That doesn't mean you're going to make money. It's just another clue that maybe you're on the right side of stuff. Even if temporarily or not. But that's a dangerous game to play, too. It's been a falling knife there, but we have seen it bounce out of here. Cash is now being pulled down, I think, probably because of the futures. Obviously, it didn't like the price gouging. We did really good not talking about politics for a long time, but unfortunately, it is front and center now.
In this case, it is directly related to
they
comments
did mention meat packing, and the ironic thing is the meat packers are going to make more money now because they're buying the cattle for less and their margins are even better. So it actually it doesn't work the way they think it's going to work. Never does. That's a whole nother topic of conversation. I think that the markets will get over this kind of foolish talk about price gouging and all this garbage that they're talking about now. I don't think they're going to trade it for long, but it was already kind of in a bad mood. It didn't need to hear that price controls are in the way. And of course, you're going to see the sugar-coated version of what they say it is, but essentially they're going to try to lower the cost on food. That doesn't sound great for producers, and the market's not acted great since those comments.
We do have a few factors though when you talk about cattle. One, we are in a very late-stage bull market. I mean, it's been very bullish for a few years now. Really, we've been moving up. We've had some very nice prices. We're also this is my speculation entirely, but on the cusp, the overall economic outlook doesn't look great, in my opinion, which can affect cattle a lot. I don't buy as many steaks when I don't have a job.
You saw the vacations. I think we're down 4% at this time of year, like air travel, and even the time frames are smaller. So it's starting to show up everywhere. I see it on the lakes. You're not seeing as much tubing and skiing as you would have saw. And of course, a tank of gas on a boat's 50, 60, depending on the boat. Some of those boats probably hold $120, $150 worth of gas. But that's the first stuff that gets cut. It's starting to get to be noticeable. Facebook Marketplace, just following stuff that you might want to buy. You notice more stuff's for sale than less, like we had the previous years. And cattle's anticipating it. It isn't today's market. It is the futures market, and people forget that a lot of times. It's ever looking forward, and you can get as angry as you want, like the grains, but the grains were exactly right. They said, hey, we're getting a lot of rain, that we have big carryovers, and we're going to see a big yield, and they futures bet on that direction. And so far, that has looked like a good bet. That's what's happening in cattle right now a little bit with the economy. They're saying everything's slowing down. Whether that bet's right or not, we'll find out. It feels like they're pressing it a little bit hard, but we'll find out in the days ahead who's right or wrong. But that's what makes a market. It wouldn't be a market if people all agreed on the price.
Yeah, absolutely. And cash is getting dragged down, by the prices, or is cash starting to come down and what will it look like in October? There's always the hotly contested. There's always the room to say that. There's always room to complain about the fund actions. I agree they do stuff that doesn't make sense at the time too. But like you said, sometimes the bets pay off.
Yeah, and they have better weather guys than you or I have. They have better analysts, without a doubt. They might be all technical. They might be very fundamental. You don't really know. They don't call each other in big groups and plan stuff out. Obviously technicals factor in a lot for entries and exit for these guys, but they're not going to tell you their recipe or what it would be called proprietary knowledge, which is code for we're not going to tell you why we get in or out. And so, but again, that's what makes a market. That's what I love about it. It's moving around. You got up days, down days. Some days you can't believe it's down. I've been in positions where I'm like, these guys are so wrong. And, at the end of the day, they got my money, and they were right that day. So, it's trading and it's cattle's being pushed hard. These are still real high prices. I think the economy is weakening up, like you say. That's been a very popular trade as well, to be short the stock market. The stock market
that's hurting right now.
Hasn't paid well.
No,
it hasn't paid well for anybody.
Of today. Yeah, we don't know what tomorrow will be.
Pretty much everybody has the exact same problem in common if you're on the short side and you're not making money, every one of them. Yeah. But, that can change very quickly too, and that doesn't necessarily follow the economy tick for tick. It's what companies make, the outlooks and all that, and so far, they're not seeing enough rockiness to sell off, and then you have the tech boom going on and all that stuff. But it's the market is ultimately right. There's a lot of sayings about the market. The market can remain irrational a lot longer than you can remain solvent. I've seen that happen a number of times.
I've pulled that one before.
Yeah, it'll humble you in a quick hurry. It's best to get out when you're wrong, and then try to. When it's going your way, try to stay in. Easier said than done. But no, the markets are a little wacky in cattle. And again, politics heavily involved, unfortunately. I really hope that in the days ahead that's seen as a bad idea. Maybe they're going to sweep it under the rug. Historically, this has been tried in the past, and it's failed spectacular. It's happened with Republican presidents and Democratic presidents, and it's just been a horrible idea that ended in way higher prices.
I thought people really enjoyed the gas lines of the 70s, though.
Yeah, and then with Nixon, he had soy meal, I believe, bans, and there might even been a wheat ban. Every single time, it's been a horrible idea because there's no incentive for the producers to produce it at a loss, and that's really what it amounts to. It's really 101 economics, but in today's world, I mean, it's I don't know. People believe what they want to believe. But it is front and center in commodities and definitely affecting the prices. And I think I don't think it's a coincidence cattle sold off ever since meat packing and the meat industry has been mentioned by name.
Yeah, there's plenty of factors. Those stories certainly don't help. It's the way that I guess I'd phrase it.
And then cattle was spooked by the stock market. It's unfortunately a market that likes to follow stuff on the way down like the stock market. Then, stock market make new highs. Cattle, it has a hard time hitching its wagon back on the way up. And it's kind of always been that way in cattle. Hogs, kind of the same way too. The meat guys, historically, it's a mean market, and this one's being mean right now.
The problem is, the real problem of the market where it's at right now is for the producer, there's not very many hedge options.
No, unless you want to hedge way below the cash price. And why would you want to do that? Ultimately, it can drag the cash price down. But still, it's an unusable board. The whole thing is it's designed for hedging. And when you get the basis this wide, it makes it very difficult to hedge. That doesn't happen near as often in grains. Grains tend to be very regional, and they deal with basis regionally. But it can happen in cattle. And it's essentially a useless board for hedging right now.
Yeah. What do? You just can't hedge, right? Is there anything? If somebody is calling you up now, what's your recommendation? I know you're not going to have them.
To wait, and it's not been the right answer necessarily. Or a couple guys have, a few weeks ago brought deciding what time frames to bring their cattle to the sale barn. They brought them to the sale barn a few weeks ago, and they called today, and they're very happy. The one guy did, because the sales have been softer. And that's really the cash market's your defense. Now, of course, that's not going to work for everybody logistically, or the cattle might not be ready, or it might not be the way you run it. But that is your only defense. And that's why, you have these producers trying to take away the futures market, and you want to get rid of this. You're not going to be happy with just the cash market. And I don't know why you think you would. You need speculators in there. You need guys saying, hey, I think cattle is going to be way higher, and driving the high price way higher. It allow for the hedging, because if you just have the cash market and big commercials and big players, you're not going to be happy with the results, at all. Like if everybody's going hand to mouth and they'll pay you what they want to pay you, I don't think you're going to win that battle with your storage on your farms.
Take a look at the dry weigh board. If you want to see what that looks like.
It's just not. It's just there's obviously cash markets and and it functions. I'm just saying. You're going to get a lot higher prices, and we talked about this earlier, where you have chances for all these hedging opportunities. You had all kinds of hedging opportunities at higher prices for corn, and and some hedging opportunities well after the weather was known. So it provided them this year. It certainly did in beans and corn well after the fundamentals and the weather was known. And people can choose to take that or not choose to take that. But don't choose to not take it and then complain about it. At least the opportunities were there. We might be headed to bear markets where there isn't those opportunities of profitability ever. And it's just this dead bear market. So careful what you wish for. You want speculation. You want these guys to think, hey, maybe there's not as much corn out there as we thought. Let's buy it aggressively and create an opportunity for better marketing. As bad as it seems now, you want both sides in there, because there'll come a day where it goes the other way.
Well, and just from a fund side, if there is a lot of short there, and there is some reason that they would have to cover those, as we saw maybe 2 weeks ago.
Russian-Ukrainian war. A lot of different things can change very fast.
Yeah.
And, then that's a lot of fuel for the fire. It'll go up very quickly.
Yeah, but if you don't have those funds, if you're talking just cash, or you're talking funds aren't allowed in this market or whatever, you have no speculators in the market.
Yep.
You're not going to see those moves either.
You're not going to see those moves. They're going to be well hidden. You're not going to see them. You're going to see it maybe in a basis appreciation, but you need people interested in the markets telling you from an outside perspective what's going on, not just what the commercials tell you what's going on, or how many rail cars they got to fill up. You're just not gonna have good information to go off of. And again, just being in a pure cash market does not create a lot of opportunities. Like you just said, it just happened in wheat. It flared up on a hotter and drier Russian, just kind of a small weather problem, really. And the wheat had a substantial rally because all the shorts in there created a wonderful hedging opportunity not that long ago. I mean, a month and a half ago.
That long,
so it can change very quickly, and then you're going to be happy that you had the opportunity that these guys bought the market. And of course, the guys that bought it on the wheat, because there was guys on the long side, somebody wins, somebody loses. Yep. They were totally wrong in their bet, and the guys that hedged got their money, and that's how it works. It's just a choice. Do you want to transfer the risk to somebody else for a profitable price? Ultimately, you're looking for a profitable price. Or do you want to just take your money chances in the cash market? If I was a producer, I would not want to take my chances in the cash market.
I got a new maxim for you there then.
What's
Not
that?
New, it's old. Right, but fortune favors the prepared mind. That's why you can't be sitting back right now and just saying, woe is me, these prices are horrible. I'm
planning for December 25. The opportunity might not be there today, but then all of a sudden in 5 days it is out of the blue, and we're ready for that. That's what you want to be doing right now. Your what if scenarios, just even on a real basic level. Like, hey, if December corn gets to this level, I'm going to do something. It doesn't have to take a lot of time. A lot of people are like, I don't want to do this. I produce. It's very busy. I got to cut tree lines. I got to do all kinds of stuff. There's no doubt that keeps you busy. But a lot of the stuff doesn't take a lot of time. You just think about it a little bit while you're out there spraying, while you're out there harvesting, or a text every once in a while. made all the difference this summer. A guy checking in, hey, I'm worried about beans. Is there anything we can do? And one text changed everything for a few guys. So don't be afraid to do that either. Sometimes, though, you'll get to markets where sometimes it's just best to sit on your hands. That's what it feels like for beans and corn right now, unless you're real nimble. It's just kind of see what happens. Seasonals aren't telling us much. The fundamentals aren't telling us much. The Pro Farmer Tour, hopefully we get some more information. That was real quiet today. It was real loud on day one. We got to see everything, and then all of a sudden, nothing. No headstands, no kernel counts. I didn't see anything.
I did not today either. I will admit I was out of the office right till I ran in to record this. So
maybe Twitter's broken. Maybe it finally broke. It's been predicted by a lot of my friends. They can't believe Twitter's still in business. Elon Musk took over. Got to be a little political somehow. I don't even know how it got to be political. A lot of people are expecting Twitter to go out of business any day, and maybe it did. Maybe it's broken.
Maybe that's what happened.
I'm sure somebody will tweet about it later.
You did not hear that here first.
Yeah, any day now. Because I don't agree, it's going to go out of business. No, it's Twitter is a very useful tool because you can cover a lot of ground. You got to learn how to sift it though. Don't go on Facebook or Twitter and just take it for what's being said. There's a lot of opinion on there, lots.
Also, do not go to Twitter and click the For You tab.
Yeah,
you only want the follow tab, my opinion.
I got a lot of fights going on in parking lots, like at Target or wherever. So I'm not sure how the algorithm got me there. But then you click on one of those, it only feeds on itself. Yeah, so I like to go following For You. I mean, if you want an adventure, go For You. Yeah, no. They make some big assumptions in the For You, but that's the way that algorithm works.
Yeah, at least you have options. The other platforms you don't have the option to do that.
The search option's terrible on Twitter, though, for sure.
Brutal.
Yeah, I don't know how that can't be improved on. It seems like you wouldn't have to do much and it'd be twice as good. But
maybe that's next if it doesn't go out of
and maybe
business.
that's the way they like it. You say something and it's meant to be seen in a short time period, and then it's to be hard to find. And maybe there is something to that design, so you can't just look it up and hold everybody to everything they've ever said. Right. But I do lean on that to see this time of year what the fields look like. Obviously I can't travel to Illinois, and it's nice to see what's going on. But it was really quiet today. I wonder what they saw in Illinois. That was a state that all eyes are on. They're expecting pretty big things out of there.
When our listeners help us get to 100,000 listeners, John, maybe we can do the Hedge Heads tour and we can live podcast.
For sure, I'm sending some stickers out to people. I mean, it at least warrants a sticker for them. Possibly a bumper sticker. When we get there, I mean, we got a little ways to go. 900 and some thousand in lot 999.
I was going to say you're being real generous.
Lots of change, but we're working on it.
Yeah, I like it. Well, anything else to add today, John?
No, just a Tuesday afternoon here, and getting to a more calm time of year for the grains, and that's what happened today.
Sounds good. Well, leave your number, so if anyone is thinking about what to do, they can call or text you.
218-731-1578.
Thanks, John.
Yep.
Sounds good. Well, we can start.
Yeah. Go ahead and lead with...
I was trying to give it a minute of silence, but...
Oh. You'll get it.